Good afternoon and welcome to a fresh new edition of Midcap Radar. I'm Prashant, with me my colleague Anisha Jain. Before we get started, in our efforts to stay safe, we've disinfected our studio and gadgets before the start of the show. We urge you to take precautions and regularly disinfect and sanitize your surroundings too. With that short advisory, let me just quickly run through what's happening on the market. We're up 115 points, so it's looking pretty solid. 10,145, which means, I think as Nigel was pointing out just a while back, we're at the day's high. I think we are at the day's high. I think for the Bank Nifty as well, if you can put that particular index up, we should be pretty close to the high point of the day. 20,851 is where the Bank Nifty is at, and 20,869 is the high point of the day. Let me just run through what's doing the best sectorally speaking before I go any further. The metal index is up 4%. What a rally metals are having. It's a global facing sector. Stocks like JSPL, etc., continue to power ahead. I think JSPL is now about 140 odd rupees now, 145 actually. So it's a big move. Second is media. Media, I think, should be largely Z, which is doing much of the heavy lifting. The small cap index comes in at number 3. The PSU Bank index, which is a large underperformer, had been a large underperformer, has sort of corrected quite a bit of it through the course of the last 5 trading sessions. But that's about it. I mean, then you go down the list, there's CPSE, commodities, etc. Private banks are also, the index itself is up about 2% or so, but I mean, it's at number 6 or 7 in terms of sectors which are doing well. Anisha, afternoon.
Hi Prashant, good afternoon. Well, yes, if you're a bull, you're definitely going happy into the weekend, because for the entire week, it is the Nifty which has been rallying up around 6%, and Nifty Bank, which had been dragging earlier, is the big star performer this week because that index is up around 8%. A lot of big movers, a lot of beaten down names have seen some buying this week. So Tata Motors, for example, is up around 25% this week. Bajaj Twins, that were languishing and were beaten down quite a bit from the highs earlier, have seen a gain of around 15 to 20%. Tata Steel, in the metal name, as we were talking about, is up 15% for the week. And SBI, that will be reporting numbers very, very shortly, is also up around 11% this week. What has been underperforming has been a couple of these consumption names, because for the week, Nestle and Asian Paints are the one that go into the red. But apart from that, Prashant, it's just a roaring rally which is underway as far as the Lal Street is concerned.
Well, it'll be a good close to the week, Anisha. It should be a good close to the week. We are up 6% so far. I mean, still 2 hours to go for close, but 6% so far for the week as things stand. Here are the headlines before we go any further. Range day of trade with a strong undercurrent. Reliance and HDFC Bank are leading. Metal stock surge and positive global commodity cues. Commodity index is outperforming. Reliance shares hit a record high after Jio Platforms announces 6th investor coming in. Abu Dhabi Sovereign Wealth Fund Mubadala invests over 9,000 crores for 1.85% stake, helping the company raise over 87,000 crores in 6 weeks. Tata Group stock surge ahead of Tata Sons board meet today. cnbc TV 18 learns that steps may be taken to strengthen the position of key companies like Tata Motors, Tata Steel and Tata Power. That is a cnbc TV 18 exclusive. Banking behemoth SBI to release numbers today. Street expects slippages to remain elevated between 12,500 to 22,000 odd crores, along with higher provisioning. L&T will also report earnings today. A cnbc TV 18 poll expects revenue growth of 2% with order inflow between 43 to 45,000 crore rupees.
Well, some lines running for you on the screen as far as Tata Motors is concerned, that perhaps the premium car sales in China are expected to be at the same level or perhaps a tad bit better in FY21, and that is perhaps what is supporting the sentiment as far as Tata Motors is concerned. But apart from that, the entire market is rallying, so let's get a technical check on the market. Imen Kapadia of KR Choksey joins us on the phone line now. Hi Imen, thank you so much for speaking with CNBC TV 18. What's your sense with respect to the market? We have been rallying for the last couple of weeks. Is there any kind of sluggishness that will come into the markets, or do you expect this uptrend to continue in the coming week as well?
A very good afternoon to you, Anisha. Thank you for having me. Well, 1,200 points in 5 days, and we, instead of taking a breather, we continue to forge ahead. So I guess logic takes a backseat. If it's such a savage move in the situation like this, it has to be a bear market rally. But a very sharp one at that. A lot of open interest at 10,000. We saw some short covering due to that, and that's what led. And I think this whole move has been led by Reliance. So, and Reliance has made a new all-time high today, if I see my charts correctly. So, Reliance has been the bulwark of this move, and it's still going strong. So, frankly speaking, it's been a surprise. And coming back to your main question, is it going to continue? 10,160 has been important, at least in the near term, keeping the recent history in mind. We're at 10,150, high of almost 10,160. If we close about 10,160 today, well, we move on past 9,300, and the Bank Nifty is playing catch up. It's been lagging for the whole move. NBFCs, okay, NBFC not a part of banks, but banks also. So I would be slightly cautious. Everything is technically hunky-dory. It's moved too fast. Maybe we need to go for a small breather. Not necessary. We are going into a weekend, and the situation remains slightly uncertain in terms of geopolitical or whatever. So everything is fine. If we close about 10,160 today, I think we continue this move, or we see a small period of consolidation.
Well, yes, absolutely, Himain. After the rally that we have seen, a tad bit of caution is perhaps warranted. But in terms of stock-specific ideas, what are you strategizing?
Yes, firstly, a buy on Coal India. We've had a cool off from 150 to 140. We've posted a short-term bottom. We posted an intermediate bottom. So the outlook has improved from a short to medium-term point of view. Well, the stock has moved a bit, so I would need to tweak my figures a bit. So buy it at 145, stop loss 142, target 151. It's about the 55-day exponential moving average. Mechanical indicators on the daily charts have given crossover buys. So outlook is positive. It's a buy. Second one is Siemens. We've had a 4 trading session sideways movement from which we are on the cusp of breaking out, and we will be also closing above the 55-day exponential moving average, assuming these levels hold after almost 5 weeks. So, and yes, crossover buys, volume spikes, seem set. I mean, all of these stocks are recoveries, rebounds, but nevertheless. So buy Siemens at 1157, stop loss 1142, target 1187. And lastly, a buy call on Colgate. We've been down for 6 trading sessions in a row. We're taking support on the 55-day exponential moving average. Things are positive. We are set for a rebound. The intraday mechanical indicators have turned positive. So a buy on Colgate at 1365, stop loss 1350, and target 1395. Anisha.
Okay, Himain, thank you so much for joining us with all those ideas. The Indian markets are sitting at the intraday high. In fact, we have had a stellar move with the last couple of weeks as well, but a large part of this is also global led because the US markets have also been rallying, and Prashant, as always, has done some interesting analysis as far as the US market is concerned. So let's go across to him as well.
I'm going to present data for the US market, but it could be any market, but that's the big market, the S&P 500, the big global index, and that kind of leads and others follow. It's largely aligned. I mean, it's a risk on globally in a big way. If it's risk off globally in a big way. I mean, at least minor divergences can happen, but larger trends are largely aligned. The question we're going to try and answer is, after very large moves, what happens? That's a simple question, okay? Let me just set up the premise with this quote from Ashwath Damodaran, who's the finance professor and, of course, a well-known teacher as well. He tweeted, the S&P has had its best 50-day run in history, seemingly disconnected from unrelentingly bad macroeconomic news, and that is driving people into a frenzy. When your narrative for the economy clashes with that of the market, the thing to do is to be humble. Humility is the best option, are his exact words. End of the tweet. So this is what he tweeted. Well, but the headline from this is that title, which is, this is the best 50-day rally ever in the history of the S&P 500, right? And it could be similar, if not maybe a little less, for other major markets as well. I mean, it's been ferocious, the bounce from the lows. But what happens after these big, humongous moves? And to try and answer it, we've got this data, which I picked up from LPL Research. The database they've used is FactSet. And look at the returns. So let me just quickly run you through what the table is about. This is the 50-day change as of these dates. As of the 18th of December 1998, there was a 50-day run, and as of this date, the S&P 500 had gained about 24%. Same for 19th May 2009, 16th September, and of course, this is the latest instance from the bounce of we've seen from March lows, 38% as of the 3rd of June. Now, these are facts, but what is unknown is what happens 1 month later, 6 months later, and then 12 months later. I'll come to these. 1 month later, returns are largely flattish. The average return is 0.9% 1 month after. 6 months, things get a little better. 12.4, 22.2, a flattish. We don't know what happens now. The average return is 10.2%. You can see only 4 episodes here, but this is the average for the last 8 episodes that we are looking at. For the purpose of brevity and presentation, I'm not putting up all together. It'll look too much. So we're just looking at 4, but the average is 8 episodes in aggregate. Now you come to the 12-month return, and this is, I think, where things get really interesting. Look at this. 12 months after such large moves, basically, you're up on an average 17.3% on the S&P 500. And the individual returns in each of these 4 episodes are here on your screen. The average is 17.3 for the 8 periods that we took for the average return. So, I mean, I think that last column more than anything else is what is actually very, very telling. One could not be faulted for thinking that after a 30-40% kind of move, usually you have a down market which sustains for some time and maybe even negative return 6 months, 1 year out. But is that so? History tells us, at least after big moves, which is defined as greater than 20% in a compressed time frame, a year out, markets are actually a lot higher. I mean, as I said, this is the S&P 500, but I mean, if the US markets continues to power ahead, it's very unlikely that other markets lag significantly behind. Depending on market-specific factors, there could be lead lags, but generally the trend is in the direction of what the S&P 500 would do. Back to you.
Well, yes, so if history repeats itself, it is probably going to, go higher as far as the market is concerned, despite the big rally that we have already seen in the global equity markets. But with that, we are slipping into a very short break. But before we do that, here's something that you, our viewers, must take note of. CNBC TV 18 and Bombay Stock Exchange, rather National Stock Exchange, have come together to promote investor awareness through a